Right. So when you see the RTP questions, you know that you're writing an attempt and you see the RTP questions, how is it? Is it like a bundle of surprise or is it like meeting an old friend? Right. So if you've already studied the subject in detail and you've done the cumulative revisions, then it will feel like, oh yeah, I'm meeting an old friend. But in case if you've just, done a reading of the subject and just glance through a few important points, then it will all look like, oh my God, what is this? What I answer I need to write? क्या लिखना होता है? कितना लिखना होता है? Like, मुझे समझा है, but क्या लिखना है? So that is why, one of the very crucial part of your preparation for audit paper is looking into the MTP, RTPs and the suggested. Right? So एक तो है coverage of the syllabus, second is the answer writing, and third is the MTP, RTP and the suggested. Right? So we've discussed the MCQs in the previous video in the Jan 25 RTP. In this particular video, we will discuss the theory part of the questions in the RTP Jan 25, right? So let's come to the first one. Right, chapter 1, nature, objective and scope of audit, question number 9. Okay. RST Limited, a retail company, has set up internal controls requiring all invoices to be stamped and signed by an authorized person in the goods receiving section of the company, stating the date and time of receiving the goods in premises to ensure that only those purchase bills are produced for payment for which goods have been actually received. During the audit, the auditor finds that two employees, a purchase manager and an accounts clerk, have worked together to bypass this control, submitting fake invoices that resulted in payment for goods that were never received. Right. So basically, there has been a collusion among the employees, right? So this happens because of the inherent limitations of the internal control, right? Inherent limitations of the weaknesses of the internal control. Okay, you are required to state the objectives of an auditor as per SA 200. You say, ma'am, we are expert in that. SA 200 overall objectives of the independent auditor when it comes to ensuring the reliability of financial statements. Also explain why auditor can provide only reasonable rather than absolute assurance that the financial statements are free from material misstatement due to fraud or error in the context of the given situation. Right. So one, they are talking about the OO, the overall objective of the SA 200. And second part of the question, the reasonable assurance rather than the absolute assurance. So this is because of the inherent limitations of an audit. And here, which inherent limitation of an audit they are talking about? It is regarding the nature of the financial reporting, the preparation of financial statements, design, implementation, maintenance of control is the responsibility of the management. However, there could be a weakness in the internal control, like due to the collusion among the employees. Okay, right. So sometimes that's the song, no? कि कभी कभी मेरे दिल में ख्याल आता है. Right. So thought comes to my mind that rather than reading this entire story over here, why not read only the last two lines of the question first, the last one or two lines in the question, which probably can give me an idea regarding, what the question could be about, and I don't need to read the entire story. But sometimes maybe by reading the last two lines, it doesn't click to you what the question is about. Then you can go and read the entire question. But many a times at CA Inter, it so happens that you read the last one or two lines in the question, you come to know what the question is about, and that saves you the time in writing of the paper. Okay, right. So now let's come to the answer to this particular question. So first part of the answer, in conducting an audit in accordance of the financial statement as per SA 200, the objective of the auditor is RFA, RFS. With reasonable assurance that financial statements are free from material misstatement prepared in accordance with AFRF, and then to report the findings in accordance with the standards on auditing. Right. The process of audit suffers from certain inbuilt limitations due to which an auditor cannot obtain an absolute assurance that financial statements are free from material misstatement due to fraud or error. These fundamental limitations arise due to factors which we call it as the FINNE. Right. So one, it talks about the nature of financial reporting, the nature of the audit procedure. Then audit is not in the nature of investigation, timeliness of financial reporting, and the decrease in relevance of information over time and the future events. Okay. Right. Preparation of financial statements involves making judgment by the management, right? So that's nature of financial reporting. Right? That comes under the nature of the financial reporting. These judgments may involve subjective decisions or a degree of the uncertainty. Therefore, the auditor may not be able to obtain the absolute assurance that financial statements are free from material misstatement. One of the premise for conducting an audit, that is precondition, is that management acknowledges its responsibility for preparation of financial statements as per AFRF and for devising the suitable internal control. However, such controls may not have operated to produce reliable financial information due to its own limitations. So, internal controls also have inherent limitation. Okay, in the context of RST Limited, the management designed a control requiring that all invoices be stamped and signed by an authorized person in the goods receiving section to confirm receipt of goods. However, collusion between two employees, oh my God, we've hit the target correct. With collusion between two employees, the purchase manager and the accounts clerk allowed them to bypass this control by submitting the fake invoices for the payment. Collusion is a significant limitation of internal control as it overrides control designed to prevent such fraud. Given these factors, auditor cannot provide the absolute assurance that the financial statements are entirely free from material misstatement, whether due to fraud or error. Okay. Right, so that is our discussion for question number 9. Now let's come to the question number 10. Right, question number 10 from the chapter number 2, audit strategy, audit planning, audit program. During the audit of ABC Limited, a medium-sized manufacturing company, the engagement partner is responsible for directing and supervising the work of the engagement team. The team includes both experienced members as well as several new trainees. Additionally, certain areas of the audit have been identified as high risk, such as revenue recognition and inventory valuation, due to recent changes in ABC Limited accounting policy. Again, it was okay if I had not read all this part. What factors should the engagement team members consider while determining the nature, timing, and extent of the DSR of the engagement team work? Right, so what do we say? Nature, timing, and extent of DSR. कि कैसे, कब और कितना direction, supervision, and review is dependent upon the 4 factors SARC. Right, so the size and complexity of the entity, area of the audit, risk of material misstatement, and the competence and the capability of the individual performing the audit. Right, so nature, timing, and extent of the DSR depends upon the SARC. What is SARC? Size and complexity of the entity, area of the audit, risk of material misstatement, competence and capability of the individual team members performing the audit work. Okay, right, coming to the next question. Question number 11, which is from the chapter of the risk assessment and internal control. The auditor of EFG Limited, a company engaged in the tours and travel business, needs to obtain an understanding of the company's control environment. To do this, the auditor evaluates whether management has created a culture of honesty, ethical behavior, and the strengths of control environment element, but collectively provide an appropriate foundation for the other components of the internal control. What is included in control environment, also explain the elements of the control environment. Right, so we have the 5 components of the internal control. Mainly we have the CRISM, and in the CRISM they are asking the retail question regarding the first one, which is regarding the control environment. So what is included and what are the elements of the control environment, right? So what is included in the control environment? It says the governance and management function, the attitude, awareness, and actions of TCWG and the management, and the control consciousness. Like I told you, you know how Rahul Preet Singh is weight conscious, and organization needs to be control conscious. right? So the control consciousness of its people, right? So this is what is included in the control environment. And then we talk about the elements of the control environment. What are the elements of the control environment? It says, one, you are going to look into the, right, the assignment of the authority and the responsibility. Then also look into the management's philosophy and the operating style, right? Then also the human resource policies and practices. Then the commitment, right? What does it say? The communication and enforcement of integrity and the ethical values. Then the commitment to the competence. Then after that also you have the organization structure and the participation by TCWG, right? So what are the elements of the control environment? In the elements of the control environment, we have the apricot, right? In the elements of the control environment, we have the apricot, right? So that is the assignment of authority, responsibility, the management's philosophy, operating style, the human resource policies and practices, the communication of and enforcement of integrity, ethical values, commitment to competence, organization structure, and the participation of the TCWG, right? And the participation of the TCWG. Okay, coming to chapter number 4, audit evidence, question number 12. Mukul is the external auditor of Bage Limited, a large company engaged in the manufacturing of fast-moving consumer goods. After assessing the internal audit function of the company, CA Mukul decided to use the work of the internal auditor to provide direct assistance. In this context, what is meant by direct assistance under the relevant standard on auditing, SA 610? And using the work of internal auditors. Also comment whether prior to using internal auditor for direct assistance for the purpose of audit, right, CA Mukul is required to obtain the written agreement or not. So that is two. Right. So one, what is meant by the direct assistance. Second, whether there is a need for a written agreement. And third, give examples of the procedure in which Mukul will not use an internal auditor to provide the direct assistance, right? Where Mukul will not use the work of the internal auditor to provide the direct assistance. Right. So one, what does it say? As per SA 610, using the work of internal auditor, direct assistance refers to the use of the internal auditor to perform audit procedure under the DSR, direction, supervision, and review of the external auditor. Simple language, internal auditor has agreed to do some work on behalf of the external auditor, the statutory auditor. Right? So that is point number one. Then prior to using the internal auditors to provide direct assistance, the external auditor has to have the written agreement. One, written agreement with the internal auditor, and second, written agreement with the authorized representative of the entity, that they allow their internal auditor to do some work on behalf of the external auditor. Right? So written agreement from the authorized representative of the entity and written agreement from the internal auditors that they will keep confidential specific matters as instructed by the external auditor and inform the external auditor of any threat to their objectivity. Right. And then what are the areas where the internal auditor cannot provide, right, the direct assistance to the statutory auditor? So that's the third one. Right. So for which area statutory auditor no taking the direct assistance from the internal auditor? So one, it says where there is the SJ, significant judgment. Second, it says where there is the SR, where there is the higher assessed RMM or the judgment required is more than limit. Right? So where there is a higher assessed RMM. Then related to work which has already been performed by internal auditor for which he is reported or he is going to report to the management. Right? And decision taken by the external auditor in accordance with this SA. Right? So these are the four situations where no direct assistance can be taken. Right? When no direct assistance for significant judgment, higher assessed RMM, work which is already done, or the decision taken by the external auditor in accordance with this SA. Okay, right. So like say external auditor has some concern regarding the organizational status, the competence of the internal auditor. He may decide, I don't want to take any direct assistance from this internal auditor. Okay. Coming to the next one, chapter number 5, items of financial statement, question number 13. During the audit of Rapid Industries Private Limited, CA Akshat notices that inventories of raw material and consumable and WIP amounting to 2.5 crore and 0.25 crore appear in the financial statements of the company for 24. He wants to verify that the above mentioned inventories, raw material, consumable, and the work in progress have been valued appropriately and as per the generally accepted accounting policies and practices. How should he proceed to verify the above? Right. So basically, it's a question regarding the audit of the inventories. In the inventory, the question is not regarding the ERC, but it is regarding the V, the valuation. In the valuation, the question is regarding the valuation of the raw material and consumables and the work in progress. Right. So that's like a detailed, very specific question being asked over there. Right. So now it says for raw material consumable valuation, what are the audit procedures? And for the work in progress, for checking the valuation, what are the audit procedures? Right. So number one, for raw material, they have to ascertain what are the elements of cost. Then whether standard costing has been used. Then also check the cost prices. And if there is any damaged or obsolete inventory, it should be recognized at the cost or NRV, whichever is lower. Right? So cost or NRV, whichever is lower. Right? Then for work in progress, it is work in progress. So what is the status of the work in progress? So stage of the production value addition. Again, what are the elements of the cost? And this material cost should exclude any abnormal wastage factor. Right? It should exclude any abnormal wastage factor. Right? So it has been asked as a question in the exams previously, and plus again it has come in your RTP Jan 25. Okay, right. So now coming to the next one. Yes, chapter 6, audit documentation. Right, question number 14. Ripun completed the audit of a listed company and the audit report was issued on July 17, 2024. However, he had not properly organized the working paper, including records of discussion with management, audit procedure, perform, conclusion reach. Oh my God, this is the definition of audit documentation, that it's a record of procedures performed, evidence obtained, and conclusions reached. More than 6 months after issuing the report, he received a letter from the regulator in connection with the audit of the company, requesting him to share the copy of the audit file. In a hurry, CA Ripun quickly assembled the audit file, adding some papers he thought were necessary, but he used the current date on the newly added documents. He then sent the audit file to the regulator, discussed the issues involved related to audit documentation and the assembly of the final audit file in the given case. Right. So when was the audit report issued? July 17. Right. So not more than 60 days from the date of the audit report, the assembly of the final audit file should have been done. Now, here a issue letter has come from the regulator after a period of 6 months. And then after that, he's adding the working papers and all. So which is the assembly of the final audit file has not been done on a timely basis. Right? So the auditor shall assemble the audit documentation in an audit file and complete the administrative process on a timely basis after the date of the audit report. Right? What is the timely basis? It should not be more than 60 days after the date of the audit report. What do we say? It is an administrative process. What changes can be made? It says only those changes which are administrative in nature. Can you perform any new procedure? Can you reach any new conclusion? No. Okay. Preparing sufficient appropriate audit documentation on a timely basis helps to enhance the quality of the audit and facilitates the effective review and evaluation of the evidence obtained and the conclusions drawn before the report is finalized. Documentation prepared. This is a very beautiful sentence. I really like this sentence a lot from essay 230. Documentation prepared after the work has been performed is likely to be less accurate than the documentation prepared at the time when such work is performed. If today I check better, today I should document better rather than documenting it after 7 days. Because documenting what I have done today after 7 days will be less accurate as compared to documenting at the time when the work is being performed. Okay. In the given case, even after passage of more than 6 months, Ripun has not assembled the audit file. He has put in some papers with the current date, which is not permissible at all. It shows that part of the audit documentation has been prepared after putting a question mark, yes, afterwards, putting a question mark on the quality of the audit. Right? Putting a question mark on the quality of the audit. Okay. Right, coming to the chapter number 7, completion and review, question number 15. During the audit of a company, CA Karthik has noticed that company's turnover has fallen drastically as compared to the last 3 years due to loss of major market and the customer. Immediately, you can, sense SA 570 over here, which is regarding the going concern. The company is in need for funds for new product development, but bankers are not willing to lend the financial support. Which additional audit procedure need to be performed by CA Karthik in accordance with 570 when events or conditions are identified? Right? So already there is an event condition identified. Now, what are the additional audit procedures to be performed by the CA? Right. So one, if management, because doing going concern assessment is the responsibility of the management. But if management has not yet done the assessment of the going concern, now you request the management to do the assessment. Then obviously, whatever the management is telling you about going concern, you are going to obtain the written representations from the management. Then when there is an event or condition because of which there is a doubt regarding the going concern, so you are going to ask the management what is their future plan. Based on this future plan, you're also going to ask the management to prepare a forecast and provide it to the auditor. Auditor is going to check the assumptions and the data which have been used in making this forecast. And then auditor, you will also consider any additional facts or information beyond the period of the management assessment. Right? So management requests them to do the assessment. Management tell them to give you the written representation. You ask management, what is your future plan? Give us a forecast based on your future plan and also any additional facts or information. Right? So these are the additional audit procedures when the events or conditions have been identified. Right? Additional audit procedures of SA 570 when the events or conditions have been identified. Okay. Right? So loss of major market and key customers and all of this are events or conditions which may cast a significant doubt regarding going concern. If these events and conditions have been identified, it says auditor needs to perform the additional audit procedures. What are these procedures? One, requesting the management to perform the assessment. Last one, requesting the management to give you the representation. Then evaluating management plan for the future action. If entity has prepared the cash flow forecast, you are going to check the data and the assumption and whether any additional facts or information are available. Right? Whether any additional facts or information are available. Right? Coming to chapter 8, audit report, question number 16. Nature of comparative information, SA 710, that is presented in entity financial statements depends on the requirements of AFRF. There are two different broad approaches to the auditor's reporting responsibility in respect of comparative information, which could be corresponding figures or comparative financial statements. Explain clearly the difference between the approach stating the essential audit report and also define comparative information and the audit procedures regarding comparative information. Okay, right. So one, comparative information, SA 710, it could be given in the form of the corresponding figures, or it could be given in the form of the comparative financial statements. Corresponding figure means only previous year figures are given. The auditor's opinion is only for the current period. Whereas comparative financial statements, the auditor's opinion is for all the periods for which the comparative financial statements are given. What are the audit procedures to be performed by auditor? One, agree the balances with the prior period. Right? So current year 2024, previous year 23, you check the balances from the prior period financial statements. And second, you check whether all the accounting policies have they been consistently applied. And in case if there is a change in accounting policy, retrospective effect quantified and disclosed, right? So that is SE 710. Right? So corresponding figure you report only for the current period, whereas comparative financial statements, you refer to your audit report for each period. And then after that audit procedure, you agree the balances with the prior period, and you also check whether the accounting policies have been consistently applied, right? That whether the accounting policies have been consistently applied. Okay. Again, one more question from audit report, question number 17. Right? Pay attention. Kiran, a CA student, was reviewing an audit report of a company when she noticed an 18-digit alphanumeric code below the auditor's signature and membership number. What is that code? UDIN, right? The unique document identification number. She wants to understand the purpose and importance of this randomly generated number as a unique code. Is this code required for audit reports only? No, it is required for reports as well as it is required for the certificates, right? It is also required for the certificates. The 18-digit alphanumeric number noticed by her at the end of the audit report is the UDIN. It is a system generated unique number. It was noticed why this UDIN thing has come. It was noticed that financial document certificate attested by third person misrepresenting themselves as CA members was misleading the authorities and stakeholders. ICAI received the number of complaints of signatures of CAs being forged unauthorized by non-CA. To curb the malpractices, ICAI implemented the concept of UDIN, that is Unique Document Identification Number. Chartered accountants having full-time COP can register on the UDIN portal of the ICAI and generate the UDIN by registering the certificates attested certified by them. An auditor is required to mention the UDIN with respect to each audit report being signed by him, along with his membership number while signing an audit report and certificate. It is required to be stated in case of audit reports as well as the certificates also. Okay, right? So UDIN not only for reports but also for the certificates. Right? Chapter number 9, question number 18. An NGO based in Kolkata collected significant donations for flood victims in Bihar. The funds were distributed to various NGOs operating in Bihar to support the relief efforts. You have been appointed as the auditor for this NGO account for the year in which it is collected and disbursed these donations. Draft an audit program to audit the receipts of donation and the remittance of the collected fund to the different NGO. Right? So NGO in that audit program, in that for receipts and the remittances. So the NGO is receiving the money and then also doing the remittance of the same. Okay. Right. So now receipt of the donation. So one, as an auditor, number one starting point, you want to check the internal control system. Now, obviously, when they are receiving the donation, they will have the receipt book. So who has the custody of the receipt books? Right? They would have the custody of the receipt books. Then after that, once the receipts are received or money is received, it could be received in the form of the checks. Right? Then these checks, it says if they are outstanding, there would also be the bank reconciliation statement. One, it could be received by bank or it could also be received in cash, and it could also be the foreign contributions. Right? And it could also be the foreign contribution. Right? So these are the points over there for the receipt of the donation. Right? So existence of internal control system, existence of system for issue of the receipt book. Right? Then receipt book should have a carbon copy of the duplicate receipt and signed by a responsible official. Then reconciliation of the bank statement. Then after that, the cash receipts, the register of the cash donation, and then the foreign contributions if any. Right? So that is the receipt of donation. Now we talk about the remittance of the donation. Right? So one, the mode of sending the remittance. Then once the remittance is given, you get a confirming receipt of the remittance. And again, to whom the donation has been remitted. And again, for that, you can have the direct confirmation procedure. And also whether the person to whom that money has been remitted, have they utilized it for the purpose of providing the relief and not for any other purpose. And then again, system of NGO selection to whom the donations have been. Right. So now first they talk about the receipt of the donation, then the remittance of the donation. So the mode of sending the remittance, then after that confirming the remittance, then after that the identity, after the identity the direct confirmation procedure, and again the utilization of the donation and also the system of identifying the NGOs to whom the donation is to be remitted. Okay. Right, coming to the next one over there. What is the next question we have? Yes, now the next question is regarding the bank audit, right? So chapter number 10, question number 19. Agreem, a CA student, is part of an engagement team conducting audit of Madurai branch of ARB Bank. Bhuvan, engagement partner, has asked him to verify the provision made by the branch as on 31st March in respect of the following NPA. Right, name of account, NPA, outstanding amount of provision. Engagement partner has already verified the NPA classification. Outstanding amount relating to each NPA account listed above are fully secured. However, only personal guarantee of the proprietor, net worth of proprietor 50 lakh, is available in the account of ASD and Sons. Comment on the correctness of the above provision. And Agrim is in a dilemma regarding classification of above account as NPA, although these are fully secured or guaranteed. What do we say? NPA classification is based on the record of the recovery, right? It is based on the record of the recovery. Doesn't matter what is the any personal guarantee or the net worth of the borrower. Okay. Right now, it says for doubtful D1 and D2. So up to 1 year and 1 to 3 year and more than 3 year. So up to 1 year, how much? 25% provision. Right. Then D2, again 40% provision. Then for the substandard, 15% provision. And for the loss asset, 100% provision is to be made. Right. So here for the loss asset, have they made the 100% provision? Yes. Then in case of the doubtful asset, how much provision is required to be made? 25%. So not 5, but 2.5. Right. And then for the substandard asset, 15% provision is required to be made. And for doubtful, they've made 100% provision. No, so only 40% provision, that is 12, is to be made. Okay. Right. So let us check the points over here. So these are the percentages given. Now, in case of AK Industries, it has been classified as D1 and it is secured. Right. So provision of 2.5 lakh should be made instead of the 5 lakh. Right. Then it has been classified as substandard. It requires provision of 15% of the outstanding amount. Right. So that is 7.5 lakh, which is correct. Right. Then VT, it has been classified as D2. It requires classification of 40%. So the provision should be 12 lakh instead of the 30 lakh. And the last one, it has been classified as the loss asset, which requires 100% provision. And therefore, the provision made by the branch is correct. And classification as NPA should be based on the record of recovery. Availability of security or net worth of the borrower guarantor is not to be taken into account for this purpose. Right? So these accounts have been classified as NPA on the basis of their record of recovery, although these are fully secured or guaranteed. Okay. And now coming to the last one. Right? Chapter 11, Ethics in Terms of Audit Engagement, question number 20. CA Sudhakar has been appointed as the auditor of Amro Limited. Before accepting the appointment, he learns that his cousin, who held shares in the company, recently passed away without children. Name him as the nominee for these shares, which have substantial value. Although holding such shares through a distant relative does not violate the legal provision or affect his independence, this unexpected inheritance places him in a dilemma. Advise CA Sudhakar on how he should deal with this situation and safeguard his independence. So basically, they are talking about the questions regarding the guiding principles to safeguard the independence of the auditor. Right? So what do we say? As a CA, when you have to do an audit, you have to be and appear to be independent. So that is BB. And be and appear to be independent. Then consciously consider whether it involves any threat to independence. Then if threat has been identified, take steps to reduce or eliminate the threat. And if you're not able to reduce or eliminate the threat, you should not accept the work. Right? So these are the guiding principles which are to be applied. right? Guiding principles which are required to be applied, right? So that is our discussion for the questions. I'm sure that it could be quite a heavy dose for you, right? Because now it's the time where you can assess whatever you've studied and now the variety of the questions that you are seeing over here, right? So yeah, see you in the next video.